And Kathleen, let's start with the Fed and the ECB, where hikes seem to be baked in already. So it's messaging for future hikes that's in focus right now.
Seems that way, doesn't it, Sherry? And let's start with the Fed. In fact, back on the rate hiking path now. In July and June, it was a pause to give the Fed officials time to assess the impact of their rate hikes. They're back saying more needs to be done. Supposed to hike by 25 basis points up to a 22-year high. That's going to be to a range of 5.25% to 5.5% now. And the question is, what will Powell signal? What will their economic outlook, however it changes, gets better, gets worse, inflation, how does that signal what happens in September? Some people are betting this is going to be the last rate hike. No one pricing in cuts at this point. It's too soon and inflation is still far too high. But and recession odds are still there. So that kind of maybe gives it a little bit of a dovish possibility. The fact that 60% of the economists surveyed in our latest Bloomberg survey see a 60% chance, even though that's less than it was. Let's look at the ECB. 25 basis point rate hike is all but guaranteed after all the things Christine Lagarde, the president of the ECB, has said. And in fact, they're expected to hike to 3.75%. The question is, what about September? Will they take another 25 basis point step to 4.0, which is now seen as the terminal rate? Very important. Last week at the G20 meeting in India, Klaas Knot, who is the governor of the Central Bank of the Netherlands, told Bloomberg Television that a July hike is a necessity. Okay, that's what we mean, baked in the cake, right? But the September move is not a certainty. They're going to watch the data. They're going to see how the inflation data go. That's the kind of messaging, though, we're hoping for Christine Lagarde to give more nuance, more signaling at the press conference after their meeting this week.
And I suppose, Kathleen, nuance is also what we're hoping for from the Bank of Japan and signalling, right? Continues to be the outlier, expected to stay on hold again. The one lone major central bank expected to potentially cut?
Well, there is one out there, but let's start with the BOJ because they're expected to remain on hold again. And in fact, Governor Ueda has said over and over, it seems, that until he is convinced, until the BOJ is convinced that their inflation rate is sustainably and stably above 2%, they're not ready to move. And even though all the inflation indicators, all the major parts of that CPI report are well above 2% and have been for months, not ready to move. And not even tweak yield curve control. That's where you're showing this. The 10-year JGB has been bouncing up against the top of the range at 0.50, but not pushing above it. The yen and the bond market more behaved recently. So 80% of economists say the BOJ leaves all policy levers unchanged. No need to tweak YCC. As Sherry pointed out earlier, though, in our pre-meeting show, Chile is ready to go 100 basis points for a cut. The Latin American, many central banks were the first to start raising, among the first, I should say, raised very aggressively, now starting to cut. So I think that's going to be one of the interesting moves. A developing country for sure, but definitely one everyone's going to be watching.